Let's take you to her at Bell Direct. Nearing the lows of the day, that was really the finish out, Julia. Quite a disappointing one.
Carlson, they say a picture tells 1,000 words, and if you have a look at the intraday graph behind me, it's pretty blatant what's happened on the market today. We saw a lot of uncertainty and a huge sell-off happening. We saw the market down by 1.4%. In fact, the market's been down every single day this week. And in the week to date so far, we've seen the S&P ASX 200 index already losing 3.5%, and we're only halfway through the week. Now, we did see a bit of a mixed lead flow through from the US this morning. The Dow was up by 0.1%, but we did see the Nasdaq and the S&P 500 index lower. It looks like around the region we did see market sell-off, so it wasn't just in Australia. We also saw the Japanese market as well as the Korean market heavily sold off. It was a day where there was a lot of news on the market as well. We saw National Australia Bank come out with its full year earnings, but the banks were sold off. We saw Telstra reaffirming its guidance. It actually managed to gain ground. Boral said that it saw a tough half year ahead, so that wasn't good news for its stock. We saw Origin saying that output was down by 25%, so we saw Origin losing ground. And MIG said that revenue climbed, but MIG was sold off as well. So all in all, not a good day for the Australian share market. It was a day where risk was back out the window, so that was bad news for sectors like the materials and the financial sectors, but it was the financial sector, especially the banks, which were the worst performing on the Aussie share market. We did see the defensives gain favour, so the healthcare and the telecom sector doing relatively well. Now, on a day like this, it is a good time to go back and reflect on how far the Australian market has come and where the next support level is for the market. First of all, we start by having a look at the support level. I'm just going to overlay the Fibonacci retracement lines over the last 2 years. And really what I want to point out is the next substantial support level, which is at 4591 points. So that's the next substantial support level that we'll be looking at in terms of the Fibonacci retracement lines. Now, having a look at some of the fundamentals of the market at the moment, let me just bring up a chart, and this is the average dividend yield on the market over the last 20 years. And I'm just going to bring up this chart to you to demonstrate that when we were at the peak of the global financial crisis, the market plummeting, what we saw was dividend yields on the market peaking just below 7%. And what I want to point out is that yields have come back to a much more normal level below that 4% mark. So historically, you can see that's a much more normal level for the market. Also, if we have a look at PE ratios, which are another way to value the market, you can see that the market reached a low of 8.5, but we've recovered to around about that 14 mark. So the market not looking so cheap anymore, and we're seeing a good gain up for the market. So I guess a lot of the traders and investors taking stock right now.
That is the thing. You've got your PEs, you've got your yields, and then you've got your simple share price, where some are saying, even with NAB today, overreaching at this juncture compared with fundamentals. When you get the result as you did today, does that one make sense?
Well, NAB really got a tick of approval in terms of its cash earnings, but when you've seen the share price rise 86% from the lows that we've seen in March, the market expects something special, and unfortunately there was nothing special in National Australia Bank's result. It came in line with expectations. There were no nasty surprises, but really not a huge lot of upside surprises for the market either. So we saw National Australia Bank shares initially rising, but then for the rest of the session it was sold off. It also doesn't help when you have GMAC, which is the old General Motors Finance, making headlines because it looks like it's going to go back to the government for the third time, asking for bailout funds. So that certainly didn't help financial stocks around the region. So National Australia Bank was sold off quite heavily, but it wasn't the only one. We also saw the other big banks being sold off quite heavily. Commonwealth Bank was the worst one there, but it has come in line with expectations. We've already seen brokers start to re-rate National Australia Bank, and Citi has been the first off the ranks, and it has downgraded NAB from a buy down to a hold, saying that there's no catalyst for further upside movement. So that was a negative for the stock as well. So altogether, the result in line with expectations, on the higher end of expectations, a good dividend declared as well, but with an 86% increase from the lows that we saw in March. The market was expecting something special, and we didn't see that today.
Yeah. And I just want to clarify, you did say there were no new nasty surprises. Well, you might not have used the word new, but you certainly said no nasty surprises. There were new impaired asset trends that came into these numbers. The market wasn't expecting that, or were they?
We did see bad and doubtful provisions rise quite substantially, so up by about 65%, coming in at $3.8 billion, but I think the market was expecting a number around about that $3.7 billion mark. We also saw the bad debt provisions up a massive 55% at $5.1 billion. So certainly that side of the story still remains intact, but on the positive side, there were a lot of positives in this result as well. Net interest margins increasing quite substantially. So for the full year, we saw a net interest margin of 2.16%, and in the second half, we saw a further improvement, so up to 2.25%. But as I mentioned, when you've seen the share price rise 86%, you're going to want to see something special.
Yeah, we saw a special performance from Telstra today because it bucked the downswing. Nice 1.5% lift. Justified?
If we have a look at Telstra shares, this has been one of the big blue chips which have been underperforming the market, so down by 15% in the year to date. And one of the key things holding back Telstra is the regulatory environment and the uncertainty surrounding its business at the moment. So I guess a lot of shareholders will be wondering whether this is going to be a turnaround point for Telstra. If we have a look at Telstra's share price, this is Telstra's share price in 2009 so far. And I just want to point out that Telstra does seem to have made a short-term base just under that $3.12 mark. So it does look like they have put a pretty firm base in there. Today we saw Telstra rebound. Of course, the weakness in the market is great news for these defensive areas like telecom, and Telstra was a beneficiary. They came out and they reiterated their guidance. So they are looking at low single-digit growth in terms of their revenue, in terms of EBIT as well as EBITDA, and they are still aiming for free cash flow of $6 billion. Now, this is a substantial rise from last year where they saw free cash flow of $3.9 billion. Of course, the critical thing for Telstra stock is going to be this NBN network and how it's going to pan out for Telstra. So that's going to be the key in where its share price is headed next.
Yeah, with the future fund saying it's too early to assess just where that might head, it's interesting that still today shares got a bit of a move higher. Have a great evening. Appreciate all those insights.
You too. Thanks, Carson.